Hello, I'm naasydnia, and welcome to my channel. As promised, here's the video about LLCs and taxation. First, let me say, I am not a tax professional, nor am I an attorney. This is not legal advice, nor is it tax advice. I'm just telling you my benefits and my opinion on why LLCs are good for taxes. First thing is, there are several to decide from, and you get to decide how you want to be taxed. Awesome. You get to decide how you want to be taxed. You see, the IRS doesn't have a special tax classification for LLCs. So there are 4 ways in which you can be taxed. As a sole proprietorship, as a partnership, as an S Corp or C Corp. As a single member owner LLC, you could be taxed as a sole proprietorship, a partnership, or a C Corp. Obviously, if you are a multiple member LLCs, you can't be taxed as a sole proprietorship. But I just want to state that in case it's confusing. Taxes are confusing. You need to decide if you want to be treated as a disregarded entity or a corporation. A disregarded entity means that you and your LLC are one and the same, pretty much. It's not a separate thing. As a corporation, it's separate from you. As a disregarded entity, your income is treated as a personal income. This is also called pass-through taxation. It simplifies your tax return. There's not a lot of paperwork to fill out. If you choose corporate status, your income is taxed at a lower rate, a corporate rate, decided by the IRS. However, both the LLC and its shareholders pay tax. So that means you end up getting double tax, unless you structure your LLC for tax purposes. LLCs can take tax deductions for business purposes, even for forming the LLC, the expense for that on their personal return. Deductions, like profits, are divided amongst the members of the LLC on their personal returns. But for things such as employees, medical benefits, or life insurance benefits, you may want to go with a C Corp. That's a better thing for tax returns. Moreover, LLC owners can qualify for the business owner's deduction. It's an income deduction up to 20% above your other tax deductions. You can also take capital expenditure deductions for equipment that you may use for a year or more for the business. So that's another deduction you get to use. If you want your LLC to be taxed as anything but a sole proprietorship, you need to use Form 8832. 8832. So that's the form you need, which is more paperwork if you don't want to be taxed as a sole proprietorship. My advice to you is to get solid legal advice, because this is a very important thing to decide. You don't want to play with your taxes. But I hope I gave you enough information so you can start to think about what you might want to do. And you can ask more questions of a tax professional, legal attorney that specialize in LLC formation. But there's some definitely pluses. Lots of things you can write off that will help you, because you're going to form the business anyway, right? As always, thanks for watching, and God bless you.